Assalamualaikum and good morning. I bid to Dr. Amira and fellow classmates. In today's presentation, we from Group 8 would be presenting about investing in proportional or fixed income securities. Before we continue, let me introduce my group members who will be presenting today. The first member is Noraina Najiha binti Muhammad Nordin. Second presenter is Nisa Batrisha binti Faizal. The third one is me, Dawati binti Tambisan. And last but not least, Nur Nabila binti Muhammad Norazam. And then these are the table of contents in today's presentation, which are about the introduction, concept of investment, fixed income securities from Islamic perspectives, sukuk cases, and lastly the conclusion. So without further ado, let's get started with the introduction of investment. First of all, I believe that every single one of us here is familiar with investment, either in general or thorough knowledge about it. Investment is no longer a foreign activity in today's society. Giving you guys a simple example, saving money in the bank. Subconsciously, it is actually one of the types of investment, which is a common practice that society does nowadays. Another example that is often seen without realizing it is an investment, such as buying a house, car, land, and so on. Hence, before we take a deep dive into the discussion of proportional or fixed income securities, let us get through the concept of investment first. So basically, what is the investment? In general, there are several definitions regarding investment, and here I stated some of them, which I define as an amount of money invested in a business or transaction, and so on. Or also can be seen as a way to make a profit and money. It also can be understood from the social point of view as a source of wealth. If there is an increase in investment, then it indicates an increase in wealth. While from the economic point of view, it defines as the involvement of funds in the present to earn income in the future. The investment made is considered as a property owned to generate income and add financial value. And now, moving on to the next point, which is the general investment environment. Generally, there are two types of assets, namely real assets and financial assets. So what is real assets? Real assets are tangible types of assets that can be used to produce goods or services, for instance, buildings, machinery, and land. While financial assets are intangible and represents claims on real assets revenue, or also known as the income. For example, like stocks and bonds. Apart from that, there are also several types of investment that exist. The first one is short-term investment and long-term investments. Short-term investments usually have a short maturity period, for example, a year or less, and also known as a low-risk investment with fast liquidity and popular among conservative investors. The instruments of these short-term investments such as savings and common shares, while long-term investments are investments that have a long maturity period. These types of investments such as bonds, unit trusts, stocks, and real estate. The second type of investment is direct investment and indirect investments. Direct investment is an investment made by a person directly, whether by making an investment or acquiring a claim on security or property. For instance, physical assets, convertible securities, and bonds. While indirect investments use the services of members or professional agents to acquire securities and do not occur directly in stock trading. For example, mutual funds or trust fund management. For the third type of investment is domestic investment and foreign investment. Domestic investment is an investment instrument involving debt securities, equities, and derivative securities, which in turn are established and issued by domestic companies, for example, here in Malaysia. Furthermore, foreign investments are investment securities by foreign companies. Now, let's look at the roles of financial markets and intermediaries. The function of financial market is to facilitate the flow of funds that come from the produced goods and services of real assets. For example, from one group of people, the savers or lenders, to another group of people, and also between the investors or borrowers. In financial markets, there are two types of markets, namely the primary market and the secondary market. Meanwhile, the financial intermediaries are the institutions that assist or facilitate transactions between two parties, which are lenders and borrowers. The examples of financial institutions such as bank, mutual funds, financial advisors, and credit union. That is all about the concept of investment. Now I pass this presentation to the next member.
I am Nisa Batrisha binti Faizal, and this part I will be presenting regarding fixed income securities from Islamic perspectives. Before explaining further in the perspectives of Islam, I would like to explain briefly about the fixed income securities first. So basically, fixed income securities are financial claims with promised cash flows of fixed amount paid at fixed dates. This means fixed amount payments are guaranteed to the investors at specified intervals in the future. Common examples of securities are bonds and certificates of deposits. Fixed income securities have been popular these days as they provide a number of advantages, such as they provide lower volatility, which results in stable returns, as well as provide higher returns compared to the traditional bank fixed deposits. Besides, this method also gives investors a hedge against the volatility and risk of equity investments, thus helping them to build diversified portfolios. Now, we look from the perspective of Islam regarding fixed income securities. According to the Islamic Sharia, Muslims are not allowed to deal in debt-based securities where the underlying asset is an interest-based loan. This is because we are aware that any markup or interest in loan is considered as riba, and it is strictly prohibited in Islam as it has been clearly stated in the Quran. أعوذ بالله من الشيطان الرجيم وأحل الله البيع وحرم الربا, which means, but Allah has permitted trade and has forbidden interest. The Prophet also has mentioned, which is every loan that draws interest is riba. Since the fixed income securities are based on a debt instrument, so buy-ad-dain seems to be the most related Islamic contract to this topic. So what is buy-ad-dain? Buy-ad-dain refers to a sale of debt. For your information, a debt receivable in monetary terms corresponds to money, and every transaction where money is exchanged for the same denomination of money, the price must be at par value. Therefore, trading of any debt-based securities and interest paid thereon, as practiced in the conventional debt markets, is not allowed in Islamic Sharia. The next part is regarding the resolution related to the fixed income securities practiced by conventional finance. The first one is the resolution of Islamic Fiqh Academy. It is stated that the bonds which represent an undertaking to pay its amount along with a predetermined profit are prohibited in Sharia. Furthermore, zero coupon bonds are also prohibited because they are loans sold at a price inferior to their face value, and the owners of such bonds benefit from the difference in their prices. The price bonds are also prohibited because they are loans in which a liability to pay a predetermined profit in favor of their bearers as a whole. Meanwhile, based on the resolution of Aufi Sharia Board, it is mentioned that issuance of all kinds of bonds is prohibited when these bonds include stipulations for the return of the amount of loan and exist in any form. Therefore, the Sharia substitute for bonds is an investment sukuk, which will be further explained by the next presenter.
Okay, so now I will continue with sukuk. Basically, sukuk is an Islamic bond. But before we continue with the definition of sukuk, let us first know about bond. So, what is bond? Bond is a loan that pays interest in a fixed term or period of time. So, when the bond reaches the maturity at the end of the term, the amounts of investment or the principal amounts is repaid to the lender or the owner of the bond. Therefore, in order to get a clearer understanding on bonds, let us look at this example. Assuming this guy as a company needs money to do business transaction, so he started to sell bonds to people. When people buy bonds from him, indirectly he can make money. As you can see in this video, this customer is going to buy bonds from the company because he confident that the company will gain profits, and after years he will get his money back with some additional interest. Hence, this is what we call bonds, a form of debt market. Now, it can be concluded because bond is based on debt and use interest rate, so it is forbidden or haram in Islam. In accordance with that, sukuk were developed in order to replace the bonds. According to the Accounting and Auditing Organization for Islamic Financial Institution IO5 2012, sukuk is referring to certificates of equal value representing undivided shares in the ownership of tangible assets, usufruct or services, or in the ownership of the assets of particular projects or special investment activities, meaning to say sukuk can also be described as trust certificates which represents a share in assets or business venture. Now, let us know deeply about sukuk. So, basically, sukuk is a security that comply with the Islamic law and its investment principle, which prohibits the paying or charging of interest. The term sukuk derived from the Arabic word sak, which means certificate. Sukuk and bonds are two different things. Why I said so? This is because sukuk involves asset ownership while bonds are debt obligations. Furthermore, assets that back sukuk are halal, whereas bonds are often involved with riba and its business finance is non-Sharia compliant. So that is one of the big reasons why we need sukuk, as sukuk were developed as an alternative to conventional bonds which are prohibited in Islam. Next, let us know about how does sukuk works. Hi, I am the head company. My company is having financial crisis, but we have very reliable business transaction that is going on. You should join us and become owners of our assets for a period of time decided. We will divide the profit accordingly to what we agreed. That sounds good. I would like to join. So now the lady is officially being a sukuk holder. Now, I will explain on the structure of a sukuk transaction. First and foremost, an entity, a company or the governments want to raise funds. So, they will create a special purpose vehicle, or we call it as SPV. So, the purpose of this company is to act as an issuer of sukuk or trustee. The originator sells the asset to the SPV in exchange for the sukuk. SPV issues sukuk certificates. Investors then buy these certificates and become sukuk holder. Investors transfer money to SPV in exchange for sukuk purchases. SPV transfers these sukuk proceeds to the originator. This completes the sale purchase transaction. Next, asset is leased back to the originator who acts as lessee. Now, an ijaro agreement governs this part of the transaction as lessee pay rentals to SPV. SPV predically receive and makes distribution to the sukuk holders. Now, the originator is working as an agent of SPV. At the end, originator has obligation in the amount of exercise price. The obligator pays the exercise price to SPV in order to be able to buy back the leased asset. SPV distribute dissolution amount to the sukuk holders to have the right to transfer the asset back to the originator. The assets is sold back to the originator, and that is how the structure of a sukuk transaction. Generally, sukuk can be divided into 4 categories, namely sales-based sukuk, lease-based sukuk, agent-based, as well as partnership-based. Meanwhile, according to the Accounting and Auditing Organization for Islamic Financial Institution IO5, sukuk can be divided into 14 types, which are sukuk ijarah, musyarakah sukuk, mudarabah sukuk, salam sukuk, istisna sukuk, and many more.
Next, I will explain about the advantages and risks of sukuk. What are the advantages of sukuk? So firstly is fixed income. So sukuk securities is attractive to investor who want to diversify their investment portfolio. So in sukuk, profit will paid to investor at predefined regular intervals. So from that, they can enjoy and ensuring that investor can get their steady cash flow. The second is liquidity. So sukuk have greater liquidity than the conventional. So this is because due to the demand that influence the sukuk market. So from this, the factor lowers liquidity risk when investor who want to sell their holdings. The third is transparency. So the sukuk is impose a high level of disclosure in contract. So from that, the accountability of the respective parties involved in the transaction will clearly define. Apart from the advantages of sukuk, there are also risks that will occur in sukuk, such as from the side of price risk, interest rate risk, credit risk, and liquidity risk. I have some case of sukuk that I will explain about that. The first case of sukuk is quite the investment dar has default on a 100 million Islamic debt issues. So the first such default for a major public Islamic instrument in the region is can be default that the investment dar which holds stake in companies such as a car maker like Aston Martin and Bobian Bank. It said that in December it was seeking to borrow up to 1 billion to refinance debt. The second case of sukuk is state-owned investor in One Malaysia Development Berhad on or often called as 1MDB. It confirmed has default in US 1.75 billion bond issue that also triggering cross the default on luckily issues Islamic bonds totaling 7.4 billion. In 1MDB also declared in default on Monday following its fail to make US 50.3 million interest payment, so that the firm said that the sukuk are guaranteed by the government.
Reached at the end of our discussion. In conclusion, fixed income securities offered by conventional markets today are against the Sharia, as it seems to have elements that are prohibited by Sharia. However, an alternative in the form of sukuk can be used effectively for meeting funding requirements. The issuance of sukuk will not only help in replacing conventional interest-based financing with Islamic financing, but will also develop an efficient and diversified capital market institution. That's all from us. Thank you.